Here are 3 reasons why to subscribe to Fringe Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What's up YouTube, and welcome back to another Fringe Financials video. I am back and I'm doing some more stock market update on my current portfolio. I know I've been away for a little while. Don't think that I have stopped doing YouTube, but I was battling a cold recently, and we're getting to the busy part of the year with conferences coming up for students at the high school. So, you know, things get a little bit busy, a little bit hectic here, but I'm still back and I'm making a video. In today's video, I'm going to update you on my Tesla stock position and what I'm going to be doing to offset my losses, because right now I'm sitting at a lot of loss right now on this Tesla stock. So if you're excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel if you have not already done so, and turn the bell notifications for future videos. We are 1 subscriber away until 30 subs, which is what my goal is by hopefully, end of the year. Anything else of that is awesome. So thank you all for your continued support. The Shrek video about investing in Shrek got a lot of support, which is absolutely fantastic. So hopefully you guys enjoyed today's video. Any questions or comments, make sure you leave them down in the comment section below. So as you can see on my screen here, it's the infamous Tesla stock, and these lines here are kind of just, well, this one line here, I'm looking at support and resistance right now. I'm trying to map out what Tesla might possibly be doing in the next couple weeks, couple months. And again, this nice thick red line here is my break-even point. So just to kind of summarize what I've done with Tesla stock so far, and I have it written all out here so we can do all the math together. So again, this has been a position I've had now for I think we're on the 3rd month now owning Tesla stock, which is, whatever. So we have 100 shares of Tesla stock at $257.50, which means I paid $25,750 in Tesla stock. Now, at the time of recording this video, Tesla is currently trading at $214.65, which means that my current loss is $4,100, or about a 16% loss on my position, which kind of sucks, obviously. You don't want to be down in the market. But being down 16% on a huge portion of my portfolio obviously isn't ideal. But the nice thing that I've talked about in my previous videos, I'm talking to you about it again, is that since I've sold a lot of contracts against my shares, I've collected $1,400 in premiums. So even though I have unrealized losses of $4,100, I've gained $1,400 back in premiums. So I'm actually down $2,700, or about 10.5%. So the selling of contracts offsets my losses right now by about 5%, which is great. It gives you a little bit of a cushion, so that way if Tesla stock does rally up, I don't need as much of a rally to break even on this position with collecting the $1,400 in premium contracts. Now, what I have done here, and I'm going to hopefully explain it to the best of my ability here, is I have started to go a little bit farther out with Tesla stock here, because it went really, really low. Which was I think it was down here. It was it's under $200 a share. Started to rally up a little bit. Started to get a little bit of a consolidation, where it's kind of trading sideways a little bit. It's up and down and up and down. So hopefully we're going to see that break to the upside here. But what I have done with my Tesla stock here to offset my losses is I have done the following. So what I have done is I have opened up and sold a contract for January of 2025. Now, that's a little over a year out. It's a year and 2 months out in the times of recording this video here. And I've sold a contract for it to be, basically trading at $260 per share by January of next year. Is it going to be trading at that? Probably. Unless we have a crazy market that, that sells off in 2024, I'm not really quite sure. Obviously, only time will tell with how the markets are behaving right now. But what this does is this contract here has opened up my account to get an extra $3,055 in premium collected up front. Now, the collection up front is a big thing to keep in mind about, as I'm going to explain a little bit later on, but I have now offsetted my losses by $3,055 for basically a whole year out here. So as it stands right now, with me selling this contract, I am actually at a profit, hard to believe. But again, it's not realized profit until this contract expires and I sell it or I buy it back or whatever the case is. But my current unrealized profit is $355. because my loss right now is $2,700 with the premiums I've already taken here, but I've collected $3,055 up front. So subtract the difference, you get $355 in profit. So believe it or not, unrealized, again, because I haven't sold my positions yet, the contract hasn't expired yet, I have unrealized profits of $355 on Tesla, even though I've lost over $4,000 on my shares, which is crazy. Now, this is for a whole year out. So obviously, yeah, I mean, I can't do anything else with it right now. Maybe I could sell it early if I want to. Maybe I can, cash it early, whatever it is, depending on what the stock's going to do here. But I picked 260 because it gave me a great premium, and also it allows me to have these two scenarios here. So I have two scenarios, and this is the mark date right here, January 17th of 2025. So it has a lot of time to bounce around and do whatever it wants. So say Tesla stock closes at $260 or higher. So $260 or it closes out higher. It's going to force me to sell my shares at that share price of $260. So even if it goes to $270, $280, $300, I will be forced to sell it at $260. Which, obviously it's like, oh, you're missing out on gains, some of that, which is definitely true. That's the risk, is that you miss out on potential upside. So if Tesla goes to $300 a share, I'm forced to sell at $260 still. So I miss out on $40 a share for 100 shares. So I'd be missing out on like $4,000 here. But this is the math that I do behind it to make sure that I kind of give myself, that return where I'm comfortable with the return, and I'm also offsetting my losses in case something happens, right? So if it closes at $260 or higher, I keep $4,455 in premium. That's this premium I just opened up right here, plus my previous ones I've already collected. So I keep $4,455 in premium. I also will make $250 on my stock price because I'll be up $2.50 from the 257.5. I'll be up $2.50 per share, but I have 100 shares, so that's $250 additional dollars. So in total of holding this position here, I would be up a grand total of $4,705, and that's about a profit of 18%. So that's 18% because you take that number divided by my investment of $25,750, and I'll be at a profit of about 18%. Now, 18% for holding this for a little over a year and 3 months is a pretty good return in my honest opinion. The S&P 500 returns about 10% per year on average, depending on how the markets are going. And if Tesla closes at 260 or higher in a little over a year, I'll make 18% on my return, which is it's a year and 3 months. So a little less than double what the S&P would probably return in that time period. And that's, again, fantastic for me. I keep my profits. I'm up 18% on it. And that's it. Now, let's say it closes below. So 257, 255, 240, 130, whatever it is. I still keep $4,000, which is absolutely awesome. So I offset my losses. No matter what the losses are, I'm offsetting it by $4,455. I keep my shares. I reevaluate what's going to happen moving forward after that. So there's two scenarios I'm going to be watching here. And again, I have a whole year to reevaluate what it's going to do in this time period here. So that's kind of what I'm looking at right now. But again, I like that it gives me a chance to have an 18% return. And I'm not looking for a crazy jump. I'm looking for it to, rally $45 in the next year. It does. I'm out of Tesla stock. It's great. It's a little bit more of a riskier position. So it allows me to sell off, make some profit on it, and then move on to my next investment moving forward, which I think is great. Now, what does this do as a result of selling this contract now instead of just like selling small ones or whatever the case may be? So since they deposit $3,055 up front into my account, that gives me over $3,000 of buying power. Now that means a lot because essentially treated it as I now have $3,000 of buying power. And then what I'm doing, if you haven't seen my Instagram, follow me on Instagram at Fridge Financials, by the way. But if you haven't seen on Instagram, I'm now using this money to trade more contracts to collect more premiums on different stocks. And the one I'm looking at is the SPY or S&P 500. So what I have done now is the following. So I've sold what's called a call credit spread. Now again, I'm still selling positions where I'm the one that's getting buyers to buy my contracts, and I'm the one selling them, and I'm getting premium paid up front. So what I have right here is called a call credit spread. It's very similar to selling a covered call, which is essentially what this is, where I have 100 shares. But the difference is that with SPY, I do not own 100 shares of SPY. I don't have 100 shares of it. So what happens is that I sell a contract at $458, and then I also buy a contract at a strike price above it. What me buying the contract above does is that gives me the 100 shares for collateral. So what essentially that means is that I have a buy of $460 for a contract, which means right now I own 100 shares of SPY, and I'm looking for it to go up to 460. And what it does is that if I have to close this position out here, my buy contract is what's used to close my sell contract here. So they kind of work together that way. So instead of me owning 100 shares of SPY, which would be about $44,000, I have this call credit spread here where I have this as collateral here. Now, what that means is that the difference between these two prices is what my premium actually is. So the premium that I'm getting is 11 cents per share. Okay. So if say this buy was say like, I think it's like $10. This one was $21 or sorry, this was 10 cents. This is 21 cents. The difference is 11 cents. That's what my price is right now. So I opened up for this SPY trade right now. I opened up 35 contracts. The reason why I did 35 contracts is it's going to allow me to take my profits or trim my losses in case the market starts to go against me in this case here. So I have 35 contracts where if the market goes up and I'm getting a little nervous, I could trim some losses so I don't realize my full potential losses, which is why I have that many contracts. So I have 35 contracts, 11 cents a share for 100 shares. That gives me a premium of $385. So that's $385, and this position is for 3 weeks, so December 1st, so the end of November here. So I'm looking at it to be $385 in 3 weeks. Now, with selling these contracts here, again, my collateral that it's worth is, if you go into my position, you can take a look at it. Obviously, I posted it on Instagram, so take a look at my position. I have $7,000 in collateral. So that means that my max potential loss is going to be about $7,000, which is why if you see my Instagram page, I know I keep saying it over and over again, my Instagram page focuses on, it's not just opening the position and calling it a day. You have to manage it, and you have to watch it and look at the risk and look at the potentials and see what's going to happen, because if you don't manage it, this could be happening where you could lose $7,000. My goal isn't to lose $7,000. I already have some numbers in play where if it hits a certain value, I sell it off. I'll take, maybe a $300 loss, a $400 loss, a $600 loss, whatever those numbers might be. So having 35 contracts allows me to trim my positions in case I'm worried or in case I want to take profits early, so that's why I have that many contracts. But what it does, get this advertisement out here, what this does is it gives me about a 5.5% return in 3 weeks. So about a month, I get about a 5.5% return, which again is very, very awesome to look at, and it's very, very doable. And it's at a 92% chance of expiring worthless, which is what I want. I want this to expire worthless so I can get my $385 here. That's what I want. And if you're telling me that I have a 92% chance of making 5.5% return, I'm going to take those numbers any day of the week. Now, I opened this up on Friday with the intent of saying this market has rallied up so much recently. Like, look at this, bounce and then boom, just took right off. I'm expecting a little bit of a pullback. Again, I'm not looking for it to rise up. This white line right here is my break-even point. I'm not looking for it to keep going up like a straight missile. I'm looking for it to have some pullback. I know there was news that came out on Friday about there being a downgrade, essentially not like a downgrade, but Moody came out with the credit assessment of the United States. They went from stable to negative, so that might impact the market a little bit. So I'm looking for a little bit of a consolidation. I'm looking for a little bit to come back and try to trade a little bit sideways. If not, come back down as a little bit of a pullback before going to newer highs. Whatever the case is, I just don't want it to hit up here, in the next 3 weeks, which, that's what I'm looking at. So I have a couple of points of resistance here to see if it's going to hit this and come back down. Somebody watch this position to see what's going to happen here. But the reason why I'm doing this is that this position right here, me collecting $3,000 up front, has helped me and have this collateral available and then make more money with. So I don't want to say it's like loaning money or I'm getting a loan in advance for it, but I'm essentially taking the buying power I'm getting from this Tesla contract and I'm using that money to then make more money on options contracts. And that's why I went a year out. I can let that position expire. I can let it do whatever it wants for a whole year. But in the meantime, I have that whole year to trade positions and trade options and trade stocks and trade and collect more money to make even more money. So it opens up more buying power for me. So that is why I've opened up the position for Tesla. Not only does it offset my losses and give me a potential return of 18% in a little over a year, but it also allows me to get more buying power, to trade more options, to collect more premiums, and to make more and more money a year. So that's the what I'm looking at for right now. We're going to see what happens with this trade. Again, I have 3 weeks, and it's at a 92% chance. So the market comes back down, the probability goes even higher. I might sell out some positions early. I'm not really quite sure to see what I'm going to do, but the market will be opening up tomorrow, and we'll see what it does. So that's kind of, again, a look into what I'm doing for my positions. I know it's a little bit of a longer video today. Hopefully you guys see what I'm doing with selling contracts to give me more buying power, to then use that buying power to trade more options. I will update you again as we go. Again, on Instagram, if I sell some positions out and make some money, you will see that. So make sure you follow me on Instagram at Fresh Financials. Thank you so much for today's video. If you made it this far in this 16-minute video, make sure that you subscribe to the channel, first of all, because this is pretty good content, I think. You know, it explains everything. You see the ins and outs of what I'm doing here. I'm very transparent with things, as you know in the other videos. Like the video and turn on the bell notifications for future videos. I will hopefully see you guys in the next video. Thank you so much for watching, and I will see you guys next time.